positions, silver and platinum. Before I get into that and our buy ratings that we're currently still in, I wanted to just touch base on the S&P 500 and give you my thoughts. It might be helpful. So let's get into it. What do you do after a big down day like Friday? Do you buy the weakness? Do you wait? Where do you go? So most people, once they get into a bull market like this, they're going to buy the dips, and don't mind these arrows. This is for my newsletter. So um, to my firm. But what I want, this is a weekly chart. So this goes back to 2022. And you can see, so this is a fairly long-term chart. And you can see the bullish channel here. And you can see we had a throw over top here just a week ago. And you can see that last week, price action, that red candlestick or bar totally engulfed the prior white candlestick or bar. So that's called a bearish engulfing pattern. And on a weekly chart, it usually carries some significance. So we're going to have to watch. We're going to have to watch that. I think the risk here is to the downside, as followers of mine know. I don't have a bearish call on the market yet, but something like a bearish engulfing pattern would be a reason to get bearish, but you want to time these right. And so as we hit all these higher highs, we had lower highs on our RSI. Now, this last high looks like we had a slightly higher high, but I'm just going to go with kind of the same because it's not a significant higher high. I mean, if this is where it ends, it's a very subtle difference than this peak. So, from a weekly standpoint, you want to buy at support, you want to sell at resistance. So, keep that in the back of your mind. Now let's take a look at the intraday chart, just the 2 hour chart. It goes back a month or two, and this will kind of help us with what I think is going to happen. So these lines, we have a rainbow bearish convergence coming on the intraday on a short-term chart. So what that means is when these moving averages all come together, which will be tomorrow most likely, maybe we start out with a down move. It makes the gold and the blue exponential moving averages touch. And then either prices will sit here while these moving averages come down. It's a type 1 convergence. This is all a la Tom McClellan, who uses this and showed it to me. Or a type 2 convergence is where you get a retracement back to that uh, bearish convergence. And that's kind of what I am expecting. So hopefully we open down tomorrow. I'll sell some shorts and things that I got, and I'll wait for this to get right up here, about 7,500. We're at 73.83. So what is that? That's about a couple of percentage points, maybe 2%. So if prices get back up here and they can't break through, then that would be the place to go short the market. And then you put your stop up just above that. So your reward to risk would be really good. And you can see we're getting slightly overbought on a very short-term basis. This is an intraday basis. As you can see on that weekly chart, we could go way down. But for you trader-oriented people, this would probably be a good place to put some shorts on. And maybe I'll make that call. I don't know yet. But that's my thoughts on the S&P 500. Potentially a lot of downside on the intermediate term. You got seasonal weakness into, well, really you do till October, but I think, we have some more downside to go. Okay, silver, we're stopped out from buy to neutral. So it was down a big way on Friday. Everything was down. I mean, all stock markets, emerging markets, metals, oil, natural gas, everything was down, no place to hide. Probably my worst day I've had all year. And I think I lost maybe 40 basis points, so not quite a half of a percent. So that's why we want diversification. That's why I say that, not because I'm saying how great I am. I'm saying it because it will help you understand diversification a little bit better. So anyway, we got stopped out. 62 was our stop. We ran that pretty good. So we took a 10% loss. I don't like it. And I'm going to be back at this because we are going into a strong part of the cycle for the metals. But I pulled up seasonality and actually, so we had a clear break of this. Okay. So, we can still go down further and this can still be a bullish wedge, these two converging trend lines, and it can touch, maybe the resistance line of that. So we're going to watch this and so what I did, because it was down so much on Friday, I hate selling a lot into weakness. And again, that's why I tell people to sell on these up weeks, so you can at least lower your cost basis. But I sold two-thirds of my silver. I see that the futures are down with silver overnight, or going into the overnight session. But I sold two-thirds of mine. Kept a small amount. Um, and so that's where we're at on that. And you can see seasonality. I pulled this up, thought I'd show it to you. Again, you can't bank everything on seasonality because sometimes it's wrong, but it is something to have in the back of your mind. And you can see that we have weak seasonality in silver going into the end of June, and then we really get in the sweet spot of silver. So, and all the metals really, platinum's the same, gold is similar. So, here's platinum. We're stopped out. So we bought at 1792. We're stopped out at 1618 for a loss of 970. Ouch again. And so I sold two-thirds of that also. So uh, that's where we're at with platinum. The seasonality looks the same. So here is the iShares commodity index, and this is big on energy, 70% energy. And you can see we have a slight break of our stop at 32. And I'm keeping our buy recommendation. If it's down tomorrow, maybe I'll go. But we're about 1% below that stop level, which for something like oil that's so volatile is not a lot. So I'm going to hold that. Some of the agricultural commodities got really hammered too, and that's I don't know, 16, 17% of this index, and metals got hammered and everything. So, but this is 70% energy and primarily oil. And so the oil chart looks a little bit better than this, but we're going to hold this. So that's where I'm at on that. Natural gas, I talked about this last week. I should have went to a neutral rating up here. I said, I've thought about going to a neutral rating on this, but I'm going to hold it. We definitely have a five-wave advance here, which tells us that the trend has changed from down to up. But we're now in the correction period of that advance. And, how low does it go? I don't know. We do have support here with a confluence of moving averages. I sold quite a bit the day before when we had this big jump up. But again, we're coming down and going to challenge this. So that is natural gas. We're still in it, still have a buy rating, and natural gas is also showing some weakness. So, if you get an update tomorrow or the next day and you own this, you want to make sure you sell some. You should always do that anyway. Our two stocks really held up really well. Two common stocks, Caesars Entertainment. It was actually up a little bit last week, and we're still in the money here. This is a possible inverse head and shoulders pattern with the left shoulder here, the head here, the right shoulder, like a man or woman hanging upside down in our neckline. If we can get through this, we have a long way up to 47.5. I'm not too confident with the way the market looks right now. So if we do get a rebound on the S&P 500 back to that bearish rainbow convergence, if this is up, I'll be selling some. So That is where we're at there. And Union Pacific was on the verge of breaking here. And then look what it did last week. It was up 359 in a down market. And so it barely held support or our stop level. And so that's still intact. So, what I'm trying to do here is protect things. You can live with a 5% loss or a 10% loss, but you can't live with a 40% loss. So